Marshall. So can you give us a tip for beginners option traders?
I'd say another one would be trading illiquid options. So many options contracts have a much wider spread than the underlying stock. And why is that? The answer is pretty simple. If there's less speculators or traders, uh, that equals less liquidity, which equals wider spreads. So why is this bad? You'll likely only be able to exit the position at a highly unfavorable price. So as an example, let's say the spread is 50 cents by $2. You buy at market at $2, you're now immediately down $1.50, which is a 75% loss immediately. So ideally, we want to trade options with an open interest in the 1000s and volume in the 100s, because speculators help to narrow the spread. They help stabilize that market, creating less volatility that results in smaller price swings.